Hello traders, this is Dion. Welcome to my channel. So in this video I just want to talk about a trade that my student took from here all the way to that swing high there. Okay, so if you know me very well, you know I don't like holding trades for too long. Now this video is not about me holding the trade or scalping or anything. No, it's about having guts. Okay, so what I mean by that, most of you, whether you are my student or you just watch my YouTube videos, most of you know how to trade, but you are scared of losing. That's one thing that really upsets me when I see a student doing that. So I have this student named Michael. Okay, so uh, he likes trading the synthetic indices. Now, for me, yes, I trade synthetic indices, but not volatility 25. I trade V75 and V75 1S and sometimes boom and crash. Now, this was, I think, of course, I've traded volatility 25 before, but this was like, it felt like I was in my own class. Okay. Yeah. So what I mean by that is that so we've been doing the one-on-one mentorship together with Michael. Now, the one thing that I've noticed a lot, and sorry for saying this, Michael. Yeah, but Michael knows how to trade, especially on the demo account. There are a lot of screenshots that I see where you see even from the daily time frame, all the analysis is just on point, and I see a lot of such scenarios with a lot of students. So guys, this is also kind of going to be, we are entering a new year, guys. You don't need to go into the new year with that mentality of you just drawing stuff on the map. Okay, you know where to take a trade, but you are not taking it with the real money. I'm telling you, you'll never grow if you just keep doing that. Okay, so just stick with me. I'll show you the kind of setups that were shown. This is in December. Okay, the kind of setups that we took together actually. Yeah. So you can see price is already in the single candle order block on the daily time frame. Okay, we'll talk about the external and internal range liquidity when we talk about the target profits. Yeah, so if you've already watched one of my recent videos on the daily bias, this should be a straightforward entry for you. All right, so price is already in a single candle order block. Now when you go down to 15 minutes time frame, when you go down to 15 minutes time frame, okay, you can see first price, this single candle order block was touched here. Okay, it was touched right here, but if you look closely here, there's nothing that you can go for here. Okay, even if you go down to 5 minutes or 3 minutes, there's really nothing much to work with here. You don't have a single candle order block on the 15-minute time frame. That's what I mean. All right, and then when it was touched the second time, a lot of candles started forming some sort of liquidity. Now if you look at this candle that formed down here, so when we had a Zoom call, and I'm telling you, he already drew all these things. Okay, so for me, what I was wondering was, I thought he was going to tell me that he has already entered, yeah, on the lower time frame, but he was wondering if he could enter. Yeah. So now the good part was at least there was still time to enter. So you can still you can see this single candle order block, which is a good thing. Okay. Now he was using the 3 minutes chart. For me, mostly I use the 2 minutes chart. So right here on the lower time frame here, I keep saying what you need, what you need is a what? A displacement first. Okay, find a displacement and then you can enter. That's what you need. Don't just enter a trade when there's no displacement on the on your entry time frame. Okay, now when we go back to the 15-minute chart again, there was a point where I thought he missed a certain entry. Okay, so I had to check myself. So you can see right here, there's another single candle order block where price just pierced through it right here. Okay, so you have this single candle order block right here, right here. Okay, now you can see how aggressive price was going through that single candle order block, because when you go down to the lower time frame, there was no displacement in actual sense. Okay, right here. Okay, so there was no change of character or displacement. All right, so price just went up, went to that fair value gap, and then went for external range liquidity down here. Yeah, so now when another single candle order block formed on the 15-minute chart and then it had to be retested here, you can clearly see the what? The displacement that was left here. Okay, this right here. Okay, now of course if you are looking at it from a perspective of having inducement, and I'm telling you right now, in this case you don't really need it. Okay, you can see the change of character right here. So when Michael came with the chart, price was somewhere here. Okay, so it was about to go in. Yeah, so the only thing that was needed here, the only thing that was needed, the reason it was the reason I had like a lot of confidence, like this looks like it's going to really work, it's the way he analyzed the market. We'll talk about how he analyzed the external and internal range liquidity, because that's really important for the target profits. Now down here, of course, there were down here. Okay, so the entry was there. Right there. You entered on the first order block right there. Sorry, not in the fair value gap, right on that order block right there. Now when it came down to uh exit, okay, the exit that I was looking at, when you are looking at the market, you start seeing different things. Okay, but at the end of the day, both of you are going to be profitable at least. So of course you don't really need to master everything. It's a work in progress. It's a work in progress. But for the exit, it was very easy to spot. Okay, because of the way price moved here aggressively, it was easy to spot where price was supposed to you know, to come back from. So this high right here, this looks like a random high. This high right here, let me put, yeah, this high right here, it looks like a random high, but it's not a random high. So on the daily, this was not a long we didn't really hold for too long. It was just 1 to 19. So on the daily, when you go back to the daily here, right here, okay, you can see where this line is. So it's right on top of this candle, the candle that took out this liquidity and then closed with a full body candle just within there. Okay, so the reason this was a good target is because of this fair value gap up there. Okay, it's because of the fair value gap up there. Another target that we had was that high there because we have a fair value gap there. Now, of course, price did not go all the way to that high, and at least 75% of the profits were taken off here. Now, if you look at how price moved just from here, after taking out that high and then reacting to that fair value gap, okay, it had to go back to retest. It had to retest this single candle order block. Now, if you don't know how price moves, this is going to be too complicated for you because you won't expect price to do this. Okay, so now if price goes back after testing that inefficiency there and then takes out this external range liquidity here, so what was expected now, let's go down 15 minutes. Okay, so the reason I like going to 15 minutes and then other lower time frames, it adds to Confluence. Okay, especially when you have a single candle order block on the 15-minute time frame. It really helps, guys. It helps a lot. So you can see price moving down. So for you to start checking for single candle order blocks, you have to start from that surface right there. You can see there are no single candle order blocks, okay, until this guy right here. Okay, so right there, when you take this guy, these are days, by the way. Okay, so the only reason you need to look out for these is because they give a lot of they just give big profits, guys. Okay, this is why you need to at least identify where they are lying just in case price tries to, you know, come back. Okay, so mm, so when you go down now to the lower time frames, when you go to the lower time frame, Michael uses 3 minutes. So, and I'm telling you guys, from 1 to, you can use 1, 2, 3, or 5 minutes. Okay, it really doesn't. If you have, just make sure there's displacement before you enter. Okay, so okay, if we look down here, let me just remove this for a moment. If you look down here, the swing high is there. Okay, that is the swing high. Now, of course, you have that change of character, which was very easy to spot, and then price just started running. So what you need to do in this case is just wait. So when price goes all the way up like that, what I like doing, if you don't want to, okay, we'll go to another time frame. I want to show you how like price tends to everything just comes together. Okay, so let's do this from down here. Let's do the fib retracement because price went all the way up. Okay, so what you want to do, get an order block that is below the 50% level. Okay, if price went all the way up without reacting to uh, your fair value gap or your single candle order block down there. So the first order block that is showing up is this ordinary order block right here. Okay, right there. So this is the order block that is showing up after taking out inducement and then coming down all the way to that discount level. Okay, and it has a fair value gap right above it. So what can just say OB. Okay, now the reason this was high quality, let me go back to 15 minutes again. Come on, 15 minutes again. Okay, right here. So it just makes a lot of sense if a lot of things come together. Okay, like they all just come into one place. It's good for Confluence, I'm telling you. Right there. Okay, yeah, so I'm concentrating on that small box right there. Okay, this is what we call Confluence, guys. An intersection there. Okay, the 3 minutes and the 15 minutes, and then you have that, yeah, and then they come together. That's Confluence, guys. If you want, if you use the maybe the 5 minutes. Mhm. So on the 5 minutes chart, this is what I was looking for. Down here, you still have the same swing high there, and then price went all the way down, swept this low, went up. It's the same change of character. Now, on the 5 minutes, what I was looking for, if you draw your Fibonacci again, if you draw your fibs like that, okay, okay. Now, just under the 50% level, okay, under the equilibrium, the first order block that you are going, the first unmitigated order block that you are going to find is where? It's right here. Okay, you can see it after this fair value gap right here. So when you draw this order block right here, so this just gives you a lot of confidence, guys. When a lot of things are supporting your entry, a lot of time frames are supporting your entry, because all of these time frames, they are all supporting that one point there. Okay, so when we go down to 3 minutes again, the entry was like this. Okay, trading is nice, guys. Also, for some of you like trading currencies during the festive season, yeah, I wouldn't really advise. Synthetic indices, they don't care about the festive season. They really don't. So yeah. Okay. So right there, and then your stop loss is down here. Of course, the stop loss had to change after price took out that high there. Yeah. So after price took out that high there, the stop loss came down to just this low here under this order block, the 5 minute order block. Yeah. So now this is where we differed on where to take profit, and I'll explain why. Okay. So the reason I like doing this with my students is it just shows that even if you are looking at different things, at the end of the day, if the market analysis, especially starting with a daily bias, if the analysis was on point, it doesn't really matter very well where you took your entry from. At the end of the day, of course, maybe your risk to reward ratio is going to be different, but you are still going to make money. That is the beauty of it. Now, for me, the exit was right here. Okay. And I really tried my best to hold for long, but no. Yeah. So for me, the exit was right here, and I'll explain why. It was just here. Everything was out right here. Okay. It was just 1 to 40. I think it was 1 to 42, not 43, 1 to 42, somewhere there. That's why I moved everything out. Now, for Michael, and if you hear my voice, I'm still laughing at this. Michael held all the way to, yeah, because of these two. Okay, the eco highs there, those two there. Yeah. So now for me, the reason I had to get out from there is because of this. If you look back from here, this is how price moves. Now, this is the explanation of why this was a good entry. On the daily bias, when it comes to daily bias, you can see here, starting from here, price did what? Reacted to that fair value gap right there. This is internal range. This is internal range liquidity. Okay. And then after that, it went where it took out that swing high. That is external range liquidity. Okay. After taking out that external range liquidity, it even left this inefficiency here, another one there, but you don't want to go with that one when you have something down here, because yeah, because of these guys. Okay, price had to go to a discount level, and if the discount has a fair value gap, price is going to reach that fair value gap. Okay, now again, it wasn't just the fair value gap that I was looking at. Okay, it's the single candle order block that was lying below it. Yeah. So after that, you still have a what? Guys, these are very simple and straightforward things. Okay, very simple and straightforward. This is internal range liquidity, guys. Okay, now after price went back to the, you can see it didn't even want to close below this internal range liquidity with full body candle. It was just weeks. So after testing internal range liquidity, where is external range liquidity? So this is where now you need to start asking yourself some questions. Okay, is it this one, or it's going to go all the way? Okay, because this is internal range, I mean this is external range liquidity, but it's within this swing. Okay, but I didn't want to take chances, and it's festive season, guys. Some of us are trying to enjoy life. Yeah, so for me, I was already out here. Yeah, so now today when he sent me some screenshots, that he took out the final because I thought we both took out our profits from here, because this was a lot. Okay, now what really impressed me, this is what the video is really about. it's it's these highs there. Okay, this was really impressive. It was really impressive. I didn't see this. These, okay, let's go to at least 15 minutes, maybe, if it can take us all the way up there. I think it's more visible. Yeah, this is what it looks like on the 15-minute time frame. I didn't see this, to be honest. Okay, so my call had a lot of confidence to hold all the way to that high. Okay, which is a good Christmas gift, which is a 1 to 68, almost 1 to 69 risk to reward ratio. Guys, these are some of the trades that you can take that can really change your account. I'm dead serious about that. Okay, the reason I like such trades is because it doesn't really matter how many trades you lost when you are looking for an entry somewhere here. Okay, if you are looking for an entry, let's say you lost like 3 trades in a row, and then you have like a 1 to, it doesn't even have to be that big. It doesn't really even have to be that big, but still, my point is this is going to change how you look at the market. Okay, it's really going to be, it's going to make you enter trades pressure free, especially when you know how to take partial profits. Okay, because this is just a big Christmas bonus. So I really hope someone learned something from this. And yeah, no, this one was supposed to be here. Just see, the one that went all the way up was this one. Yeah, so yeah, guys, I wanted it to be a quick one, but yeah, maybe I just like talking, and maybe I was just too impressed with my student. Otherwise, yeah, if Michael, if you watch this, yeah, I'm really impressed, to be honest, and I really hope you just have a lot more cards, bro. Come on, you can do these things. Otherwise, guys, happy Christmas and prosperous New Year. Otherwise, happy trading.